I'm looking at Malta as a potential place to live while growing a consulting business. With the non-dom system, how does something like this get set up to minimize taxes overall for an American citizen who's resident in Malta, both personally and for business? So David, you want to talk us through the non-dom system? How does it work? Is it similar to Ireland and the UK? If not, how?
Yes, it is. I suppose it is similar to the UK. So if you have non-dom resident status, you're subject to tax in Malta on any income arising in Malta and any income remitted to Malta. So capital gains arising overseas, even if they are remitted to Malta, are exempt from Maltese tax. Malta also has set up, launched over the past 6-7 odd years, various residency programs. There's also a citizenship program, but I'm sure we'll delve into that later on. But there are residency programs which are designed for people in various stages in their lives. So whether they be in retirement or about to go into retirement, as well as if they're still active and in business. So it would really depend on the particular circumstances of the individual. And then, people like our organization or others can advise on the appropriate product. Malta is English speaking, so that is a huge advantage. It is one of the few countries where we have 2 official languages, which is Maltese as well as English. It's a small island, about 60 miles south of the north, about 60 miles south of Italy, of Sicily. So literally on the border between Europe and Africa. Well, we're about 120 miles north of the African coastline. It's a very safe country, about 500,000 in population, including an element of expatriates who live and work here. There's a thriving tourism sector, as well as a thriving financial services sector. Malta was one of the very first countries to regulate and legislate iGaming. So that has seen over the years an influx of some of the major players in this industry, and some of them have established significant structures in Malta. And this is why there's also an increase in expatriate headcount, particularly from the UK, Germany, Scandinavia, Italy. Very few, to my knowledge, from the US, although that is changing.
Okay, thanks a lot for that. So in terms of the res non-dom system, is it, so you're saying it's like the UK? So once it's remitted into Malta, it'll be subject to tax. Now, is it also like the UK in the sense that there's no particular election to be made in advance? It's afterwards when you're filing your tax return retroactively, you make that sort of declaration. Is that accurate?
Correct. Our tax system is based on self-declaration. Mm-hmm. Okay, so in June of the following year, so in the year of assessment, we prepare and file our annual tax declaration, in which we are to disclose any income, capital gains that we have recorded, received during the preceding year. And on the back of that, there is a tax calculation which is made, and any tax which is due is then settled, as I said, by the end of June of the preceding year. It also depends on whether the individual is under a residency program, because the various residency programs have different tax regimes attached to them. So one particular program for non-EU nationals is what is known as the Global Residence Program. So that would apply for anyone who comes from any country which is not part of the EU or the EAA. And that is based on a minimum tax of 15,000 euros, which is paid annually. So the 15,000 is an assumption that the recipient has remitted to Malta not less than 100,000 euros in active income. And that active income is then taxed at a rate of 15%, flat rate of 15%. Any remittances that are made, which are in excess of that 100,000 euros, are also taxed at the same 15% rate of tax. However, any income sourced from Malta is then taxed at 35%, which is the maximum personal tax rate, which also happens to be the fixed corporate tax rate.
Okay, that's good to know. Now, in the UK, I guess it's been in the public domain as the newly appointed or elected or selected prime minister. His wife, I understand, was previously under the non-dom regime, and there seems to be a lot of pushback. But it's not recent; it's been a trend for the past, let's say, 5 to 10 years, where there've been a gradual I don't want to say erosion, but limitations in the non-dom regime in the UK. Now there are all these deemed domicile rules. Is this? I'm mentioning this because I'm curious. Like, is there a similar trend in Malta where there's some pressure being put on the non-dom regime, and are there deemed domicile rules in play now, or do you foresee any and coming up?
I think the res non-dom does allow for some aspects of planning, even let's be frank, aggressive planning, because there are some gaps, and these gaps can and have been exploited. At this stage, to my knowledge, there is no particular drive in Malta towards narrowing the scope. However, Malta is fully compliant with OECD pronouncements and also with EU. So we work hand in hand with our EU partners, and if there is any pressure towards revisiting this or narrowing the options, then of course it is more than likely that Malta will follow suit. However, as we speak today, to my knowledge, again, there does not seem to be any particular focus by the Maltese authorities to revisit or change the current rules.
Okay, fantastic. Thanks a lot for that.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.